All right, let's go ahead and get started. It's Jeffrey Scott. I always say when I travel, I might not get to it, but who knew I'd be sitting here up in the Hudson River Valley in New York, and I got this great view in the mountains. And my wife said, I need some free time, go do a video. So here I am. All right, so this is my weekend market update for August 16th, 2025. The diamond hits a new intraday high as the markets limp into the weekend. It was an interesting week. CPI good, PPI, well, it was too good, so it was perceived as bad. From almost a certainty of a rate cut and talking about 50 basis points to most likely a rate cut in 25 basis points, concerns about the economy, tariffs, everything, and then sort of a missed opportunity or maybe the start of something that will be a big opportunity with Putin and Trump and try to put Ukraine away from a war perspective. And then over the weekend, hearing that we might give some security guarantees to Ukraine. Lots of things going on. Still an earnings season. Market has been punishing losers and really rewarding winners. Market keeps climbing that wall of worry, whether it's tariffs, rates, wars, entropy in this country with Trump. Lots of reasons that there's concerns, yet the market keeps getting higher. Question, when does it stop? Again, my name is Jeffrey Scott, and I am the Market MRI Pro at gmail.com, and my Google group is called Top Down Trader. I'm on the road without my usual mic. We'll see if this one works okay. Just trying different ideas for mics on the road. As always, this is for educational purposes only. Anything I talk about should be taken purely as education and not investment advice. I do these videos to show people how to use my tools in top-down trading. We're going to focus today on Market MRI Pro. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor. And I got tools in multiple platforms, but I'm an independent trader. Let's go ahead. If you're looking for my wealth charts video, it most likely will be there Monday morning. Depends on what happens Sunday and with my traveling, but I'd count on it Monday, and we'll use wealth charts for that review. We'll come up with the exact same answers, I suspect. My Google group is called Top Down Trader. All you got to do is go to Google Groups, sign in, go to all groups, search for, hit join group, Top Down Trader. Let me know how you want to be notified. Why will you do it? Because, hey, I'm entertaining. I'm just kidding. I'm not. Been told by my kids I'm boring as hell. But no, you do it because I'll give you discounts on my software. I'll give you invites to some top-down trader only online education and some banter about the markets. And I don't always post my videos on YouTube. It's much quicker not to. I am having a live meeting. We're having the meeting whether anybody else comes or not, but we could use a few more people. Um, October 27th and 28th at the Marriott Palm Beach Gardens. For those who are going to the John Person meeting, his is the 25th and 26th. I guess now it's at the Hilton Garden Inn. It's about a mile from where mine is, so you wouldn't even have to move hotels, or you could switch if you want Marriott points instead of Hilton points. You get a $40 rebate towards purchase of any of my tools, 2 days of education, and I'll do some software instruction as required and requested. $12.50 includes breakfast and lunch on Sunday and Monday, a dinner cruise on Stocks and Docks Sunday Eve, and we may have a casual dinner Monday night if enough people are sticking around. The hotel is the Marriott. It's a full-service Marriott off of PGA and Palm Beach Gardens. If you elect to come, you do not need a car. Just Uber to the hotel. It's maybe 15 minutes from the airport. For more information, reserve your spot, please contact Jeffrey Scott at marketmripro at gmail.com. For those people who've already paid, I did send you an email that included the name of the meeting for the discount codes and things like that. You might as well, sorry about that, take advantage of those codes and get the best price for the meeting, for the hotel perspective. Is there a recession in our near future? This is always to me the big danger. And why is that? Because let's say this market pulls back over the next couple of weeks, September typically being a weak month. What would be expected? 6, 8%, 10% worse on the downside. What if we were in a recession? Well, then the bets are off because bear markets in a recession are much worse than in a secular bull and a good economy. Well, right now we have a good economy, so I don't expect anything horrible. But we'll talk to me about next year. Um, Reason why I would say next year is that if you see this is the yield curve, and when they say inverted, it means it goes below zero. This is the 10 minus 3 months. This is the 10 minus 2 years. And what I just want to point out is every time we cross above the zero line and stay, and there's tendency on the short term one to revisit below, eventually you get a gray bar. And the gray bar is a recession. We haven't had a recession yet, and we've been above the black line on the 10 minus 2 years for some time. Now, if we get a recession, we're going to expect credit to be tight. Now, you could argue that this chart does not show you the tightness until you get the recession. I agree with that, but the recession doesn't come in from low levels of credit tightness. And we are at low levels right now. And if you look at the General Activity Diffusion Index, typically recessions recur when you're at minus 20 or below, and we are not at minus 20. In fact, the last one we had was positive 15, and we have one of these coming up this week. It's only released monthly. Other thing I like to look at is news and earnings. Home builder confidence, housing starts, FOMC minutes for July. I don't think anybody really cares anymore, to be honest, because of the data that's occurred since then. We know we had two dissenters. We know it's been years since we had two dissenters. We also know that there's been a addition to the court, a replacement from Trump, and that's going to be somebody who's probably dovish. And we know that there is a lot of pressure on Powell, so we'll see what happens. On Thursday, jobless claims. Here's that manufacturing survey, some PMIs, more home sales, leading economic indicators, and then nothing on Friday. So after a week where we have PPI and CPI, and it seems like a light week, but there's still stuff there that can move the market. This chart just calls out the. Let's see, I think I missed one. Let's see. Yep, this is the E index, and I think it's breaking down. And I think that's meaningful to me. It closed below the 50. It was down over 1%. You could see it had the bongo. It lost its uptrend finally. It had a mobile breakdown from a squeeze. It had a pocket pivot to the downside. John Person's sell signal came in back here. And why is that important? Because if this thing is truly rolling over, and we'll see what it looks like on Monday, of course, a big rally could obviously impact my thoughts. But even with the rally days here, it hasn't budged. If this is rolling over and the leaders are breaking down, typically that means the market's breaking down and the market will follow. I decided I'm going to hold, I'm a doc, so I'll call it office hours on Tuesday night at 7 p.m. I'll have a link in the remarks section below. We're going to do a market review. We're going to look at the workflow of how I use Market MRI Pro and some of my key um, tips for using it. I'll have it ask me anything, and then I'll show you what's coming new. Anybody's welcome. If you have my tools in TradeStation or in Wealth Charts and have questions about those tools, hey, I'll be able to answer those as well. So please join me. It's free, and we'll go as long as it takes. And we'll see you Tuesday. Let's go take a look at the charts. Again, I mentioned my Google group. Now, this is not the Marriott, but hey, if you want to bring your family or you want to bring your spouse or your significant other, this is a beach. This is a beautiful ocean. And it's 10 minutes from the hotel that we're holding at. This is the Marriott on Singer Island. I've held meetings there. The hotel rooms are about 4 times the price. And that scares people off, so I don't want to do that. But hey, if you want to make somebody happy who likes the beach, stay there when you come to my meeting. All right. Let's take a look at the market. So this is the market MRI tool. This is the daily briefing. So real-time updating during the day are all these columns. The diamonds are the only thing that closed up at 0.08, but actually at the lower part of the range. The spider down 0.23. The dollar was up 0.33 on Friday, or down 0.33 on Friday. We'll talk about 5 days in a minute. The volatility is was slightly down. Q's minus 4.4, Russell 4.9, and Bitcoin 0.88. So a general weakness in the market, but nothing profound on Friday. If you look at the 5-day change here, you could see, let's just, might as well just do that order. Come on. All right, what did I hit? Hold on a second. Something, I bet it's this thing. All right. If we look at the 5-day change, we could see the Russell was up 3%, the Dow 1.7, Spiders 1, Q's lagging at 0.5%, Bitcoin 0.5%, dollar was down a bit on the week, and volatility was down as well. If we look at the new high, new lows at 52 weeks, the good news is they're still positive on the highs and the high minus lows, but the numbers have come down quite a bit. If we look at the performance on Friday, you could see why the overall market does not feel as happy as the Dow did, and the indices were up for a while. Only 32% of the S&P 15 were 100 were up, 40% of the Nasdaq, and 38% of the NYSE. When more stocks are down than up across the market, that's when stock pickers can shine. And so this was a stock pickers type of a week. If we look at the 1-day change and we look at the market on Friday, and these are the S&P 500 sectors, and what I've basically done is I've ranked it here by 1-day change. Staples, energy, and materials relatively flat, and the laggards were financials, technology, and industrial, which have been some of the leaders. In fact, if we look over 20 days, which is about a month, you could see, sorry for that moving, it's a format issue we're trying to figure out, 2.23% up on utilities. A lot of them are generation of power generators supplying and working deals with data centers, including some nuclear ones. Technology up 1.87, Staples 1.4 were the only things that were up on the week. If I look at my timing model has been great for keeping you in rallies and keeping you in the market. And I look at a short term, which is the daily, which filters my thoughts on the market. My dominance can be determined by the weekly. But right now, you could see the daily model, and just look at this down here. Green is gold, green is long. And you could see the spiders, dailies long, the Q, the diamonds, and the Russell. Now, when I look at the charts, and I especially look at the last 3 days, I see the spiders are going sideways at all-time highs. I could see the Qs are pulling back from all-time highs. I can see, I apologize, my mouse, I got to get a less sensitive mouse. Let's just put it that way. Change this to 100. The Russell, which has not hit all-time highs, is pulling back from its recent highs. And the only thing that's right up on its highs is the diamonds. And this was an intraday high. If we look at the U.S., excuse me, before I go there, let me stay here for 1 second, my bad. Let's look at the weekly. And you can look down there and see that each of these on those green lines are positive. And you could see that the spiders is at a weekly closing high. The Q is at a weekly closing high. The diamonds didn't, I don't know if they got the closing high, but they set an all-time intraday high. And the Russell has not gotten close to their prior highs back here. All right, let's look at the U.S. index ETFs and take a look at how they performed this week. We'll look at the daily, these are weekly charts. Let's go down to daily. So one of the things that has been not a concern, but a reality is that we've had, this is the 10-year seasonality predictions, and we're flat for the next 2 months. In fact, going into September and end of September, we head down a little bit. So seasonality is not the market's best friend right here. And so if we look at the spiders, which are right at all-time highs, consolidating here, this was the past high going back to the left. You're going to have a lot of support under here. All right. You're going to have the 17-day. You're going to have the 50-day. And then the 200's coming up, and you have these prior highs, which was resistance for some time. But are we at the top of a trading range and we're going to pull back? Or are we breaking out here to all-time highs and the market's just happy? I get worried about seasonality. I think you got to have three scenarios of what the market could do. The high road is we just break out and go much higher, which is not going to, all right. We go to all-time highs, which is probably not going to stay because I'm outside the charting area. Yeah, oh, no, it won't change. So let's just hit the escape, make those go away. So option number one is that the markets trade to all-time highs, and that'd be great if you're long the market. I'm mostly long the market. I don't think that's what's happening. The second scenario is we go sideways in this range for a while. I wouldn't be surprised if if that's what happens. I think that you could set a support and a resistance area, and that the market is could bounce between those for a while. That might be healthy and then break out or break down. Obviously, I like break out. And the third scenario is it pulls down and it doesn't stop and it pulls back. Again, that's where the support here comes in. That makes me think we're not going to have a big sell-off. So if we look at Friday, you could see we opened higher, traded down at the end of the day, and we were down 0.23%, really sideways the last couple of days. If we look at the Qs, similar, set the high on Wednesday, pull back the last two sessions, and everything I said there could go into effect on that. And they also have some sideways to sideways down seasonality. It's that time of the year, folks, when big market moves to the downside occur. And that's something I keep in the back of my mind. Now, the diamonds are a little different. And well, they're a little different, but what the big difference is, their all-time high was set back here. Let's see if I get that to line in here somewhere. And if you keep going to the right, you can see we took out. Now, the bad news is we had a false breakout. All right, when you take out a line and then you close below it, not always a positive thing. So that's one concern there. But the diamonds all-time high, we'll have to watch that false breakout. But you got the same story, kind of weak seasonality. And you got a 17 and a 50 right underneath, so you'd have support. If we look at the Russell, nowhere close to all-time highs, which I showed you before. They're all the way back here. But look at this recovery that the Russell had, this never loved, an off the line V-shaped recovery. What a great move. Broke out of this descending trend line here, retested, and we'll see. I think right now small caps seem to be in favor, and maybe we see that continue to go higher. If we look at volatility, we know volatility was relatively flat on the week. And when you get just a few percent move off of a small number, it's not a big move. And you could see here 1.75, so it was up on the futures, but really off of a low base. And one thing that I've been concerned about, and I think Sagar has talked about as well, is the dollar strength. I think the markets love a weak dollar, and we've been fortunate that we have been bouncing around down here during the recent rally off the V bottom. It threatened here, but it failed. I mean, a break above this line, do we run up to the 200, and does that become an issue for the U.S. markets? I think it could be something to watch. On the commodities front, you could see not much in gold and silver on the day. Gold was a doji bar up 0.06. Silver looks like it opened and closed higher, flat on the close. If you look at oil, it's bouncing around on the 200. Natural gas, I don't even care about until it gets back up at least above that 50. What I do care about is the 10-year and the 30-year. If everybody thinks the market's going to be rallying because they're cutting rates, they're cutting rates. I mean, what a, I just had a funny text that I can't understand. But I worry about the 5%. But if market's cutting rates, this is what one of the fears have been, is that the bond vigilantes um, may sell off bonds when they cut rates. And that could cause some higher rates at the long end, which impact on mortgages and other things. So I'm watching that 10 and 30. I think that's concerning. If we look at the buckets, we'll just say they're neutral. It's an ebb and flow between building up below the Bollinger Bands and then recovering, or building up above the Bollinger Bands and then pulling back. And we're neutral. Market breadth is here is the NYSE just off all-time highs. Here is the NASDAQ composite with a little pullback similar to the Qs. Um, what has been most important is you have a confirmed Hindenburg omen on the NYSE, but to me, it's not an issue till I break the 50. It colors my feelings. Even though I think the markets probably resolve higher, it's that Hindenburg omen that helps me believe that we might have a bit of a pullback first. As long as we stay above the 50, I'm not going to be too worried. Um, if 50 seems like a big deal, but if that 50 is 2432 and our close is 2802, it's a 4% move from here. If I can't weather, or you can't weather in your portfolio, a 4% correction, then you either got too many stocks or too much margin, because a 4% correction happens all the time. On the NASDAQ, it's a little different. We haven't had the Hindi, but Hindi classically seen on the NYSE, although I've done several videos talking about why I think it's the NASDAQ, that the NASDAQ Hindis matter as well because of the different makeup. They had a bango on Friday, which is sort of the baby out with the opposite of the baby out with the bathwater. Everybody's selling everything indiscriminately. The market just drops hard, and everything's down. The bango's the opposite. You don't usually see a bango on a down day. That's kind of interesting. Here we could see, volume was not that exciting, wasn't that high on Friday, which is a bit surprising because it is a market option expiration, monthly expiration date. Perhaps it's because it's August and all the pros were in the Hamptons and too busy to be doing anything. If we look at the stocks above the various moving averages, white is above the 20, green's above the 50, red's above the 200. We're in the middle. When we're at the bottom, usually means we're going to bounce and go higher. When we're at the top, we're going to come down. If we look at new high, new lows, I mentioned before, they are positive, and you'll notice it's mostly green on this board. If we look at the advanced decline, that's 2 negative days in a row, and up-down volume was positive. So this, what does it tell me? We're not extended too much. I don't see any reversal signs. I still worry about that Hindenburg. Here's one that has an additional signal, and it takes a few seconds for this one to load. And the reason it takes a couple seconds is that we actually have data going back to 2000 with all the calculations. Here is perhaps something concerning, and I can show you all of it on this one slide. This is the S&P 500, all-time high set on Friday. We are at 98% of 13-week new highs versus new lows. That is typically a number that we reverse from. So I would be very surprised if the larger cap stocks don't have a little bit of a pullback. It could be one-day pullback. The new high, new lows in the S&P 500 are getting stocks above the various moving averages is weakening at all-time highs. The AD line is weakening at all-time highs. And you've got a divergence with the RSI. So that's two divergences and an extension, and I guess a third divergence. So I put all that together, and I have to add that into the concerns that the market may need a little bit of a pullback here. I am not by any means calling for the market to collapse. I still have long positions, although um, in my model trading account, which I presented results on right around July 4th. I'm not going to reiterate them because people I don't like to talk about my performance, and I don't um, like to talk about it without the data to support it. And I have the data, but I showed it on July 4th. Net net, I doubled my trading account in the first 6 months of the year, and then I added a bunch more cash to see if I could do it again, and we'll see what happens before the end of the year. To me, it's been a great year for stock picking. So we have the Nasdaq Composite and the Russell here and the S&P 1500. The 1500 is at 89%, but none of these are numbers that say we're going to trigger. And we are seeing falling AD lines everywhere. The Nasdaq Composite is just the one that's the most obvious to me. So to me, as you could see here, so why do I have data back to 2020? Because I like to go back and test ideas. Um, we've talked, Praveen and I, about maybe reducing that amount to speed up the program, but I like it, so we'll see what people think. So let's sum up my thoughts on the market. With a weekly long, a monthly long, which I didn't show you signal, and a daily long signal, I can't be saying short the market. But with the divergences that I just demonstrated, with that 13-week new high, new low on the large caps, it would not surprise me to see a little bit of sideways move and some weakness, especially in the large cap. We have seen a small cap move, and it might not be small cap growth that goes to the forefront. Look at things like biotech and healthcare that have been beat up. Our airliners going to start going up. When I looked at my top-down review, the leading names were solar names and biotech, at least by leading numbers, that made it to my buy watch list. So we'll have to see. That is a big change. In fact, let's look at the ratio charts, which look at the strength of an S&P sector. You could see them here. Forget Bitcoin is not a sector, obviously, but compares the underlying with a ratio chart from the spiders. And if you want to see what emerging strength is, it's this long white line coming up on healthcare. And a lot of that is biotech. You can see defensive things like Staples showed a little bit of strength going into the end of the week. Not much out of utilities. Real estate also showing a little bit of perhaps turnaround coming, as is materials. But when you look energy, okay, showing a little bit as well. Financials tried and failed. Um, Technology, which has been the leaders, pulling back some. Industrials has pulled back significantly. Discretionary's trying. Communications weakened a little bit at the end, but it's been strong for a while. So if you look at things that have been strong for a little bit of time, it's technology, it's been communications, it's been even discretionary. But over the last couple of days, it's been other things, including healthcare, that are starting to move the market. All right. And I wonder if the energy thing that we're seeing picking up isn't about solar. The JS layout is my how I actually look at the market. Now, I've been breaking these up into 2 videos. I just don't want to commit to that because I'd rather spend time with my family tomorrow. Um, I don't always get to be around my grandson, which is pretty special. Even though yesterday he cried for an hour straight when when his parents left him with Mimi and Poppy. But that's okay. He got over it, and so did we. This list, which is my impulse list, is everything in the NYSE, the NASDAQ, and the Amex filtered for $1 and 100,000 shares. It ended the week with 3,727. Each of them are assigned into sectors and industry groups. So I look at a much broader market than just the S&P 500. Now, when the thing that's moving the best and the one that's most likely to go up because it's undervalued or underperformed is the S&P 500, I might look at the S&P 500 sectors. But I think we're rotating out of those big guys right now. So I like the broader sector view. I put those into the top down. Here's the various sectors, and here's the industry groups. There are a couple of different ways that I can look at ranking them. I could look at just 1 day changes, but I like a little bit longer. So I'm going to look at FM2, which is a 2 day momentum view of these indexes and of the sectors to start. And I'm going to go with the top four: communications, healthcare, real estate, and energy. Then I get the industry groups that are in these top four. Let's do the same FM2 and let's take the top 10. Notice what number one is. Number two is a big bounce play related to Berkshire Buffett's investment in United Healthcare. These have been destroyed. Heavy healthcare, and those are not influenced by Buffett's investment. Internet content, 1, 2, 3, 4, 5, 6. Telecommunications, then REITs, 8, 9, and then biotech, 1, 2, 3, 4, 5, 6. So these are the top 10 industry groups in the top four sectors in the market right now. I'm going to come in here and I'm going to filter out right away, and I'm going to kill things that are below $5 or 500,000 shares. That leaves me with 266 stocks. Let's keep to the theme of the 2 day momentum. And what I like to do is I like to just start looking at them and see if anything looks good. The way that my system is set up is I do stream the data real time, but you have to ask for it. And I can get all the way down to minute charts, and you could update them as frequently as you want. The first time I ask for it on the day, it takes a few seconds to load. So here's United Healthcare. Why would Warren Buffett invest in United Healthcare? It's not a leader. If anything, it's a laggard. It's got FBI and other investigations going on because of some of their business units. They had a disaster with this thing called Change Healthcare impacting the cash flow on hospitals and physicians across the country, and I suspect some lawsuits will come out of that. It's because Warren Buffett's a value play. Does this company have a revenue problem? Absolutely not. Look at the revenue growth rates. So it's growing its revenue. It stubbed its toes on the earnings because of all the issues that are going. They have changed their CEO. The multiple forward still looks pretty high at 24.88. That would be today's price versus future PEs, and that probably reflects some PE compression, or earnings compression rather. It pays a 1.6% dividend. So as a growth stock investor, a guy that's in and out trading for growth, trying to run trends as long as I can and getting out, I'm not attracted. First Solar, different story. Now talk about a group that's been maligned. The whole Trump versus Elon Musk, the taking away first of solar subsidies and now taking away tax credits on EV vehicles. When I look at the fundamentals, I think the leading solar company is FSLR. So let's look at FSLR. Its earnings are not to August 4th. It's projecting $4.28. Excuse me, November 4th. I can read. If I go down to October 29th, that's the closest. This says it's going to be higher, $1.37. That's like 30-40% growth rate. That would be huge, and then maybe we'll get a surprise. I don't have a revenue prediction, but if it grows its earnings this much, it's got a forward multiple of 11.68. There's probably a reason why it's moving up and moving up on good volume. I could also click over here and look at the news. And what's cool is, why were investors so fired up about First Solar? Well, what you could do, you can click on it and you could read what the Motley Fool thought about it. So I think that First Solar is an interesting stock. it might be one that I will be looking at, especially if I believe that something's going on with solar. And I could look at the weekly as well. It's a loose stock. I like buying things that have pulled back to support. And unfortunately for First Solar, it actually broke support, but it's taken off now. Here we are. I knew it broke the 200, but it's moving up. It took over the 50. And as you could see, it's got some decent 5 and 10-year seasonality coming up, unlike the market. I like to look at this relative strength line, which is the relative strength of the stock versus the spider. And I like to see it crossing over its moving average. This is OBV versus moving average. I like it. This is the trending indicator. It says it's in an uptrend. And this is a high-low jump, which says it's not extended. All right, Spotify, this company I can never understand. It stubbed its toes on earnings. You could see a big drop here. So at least the analysts are projecting a big turnaround, and you'll have $1.96 compared to $1.61. So it's about a little bit over a 20% growth rate. Revenue also, I know they had some problem with their advertising, big PE. I don't even know why people listen to Spotify, but obviously a lot of people do, and I think that's kind of where their valuation comes from. I have it, but I've never paid for it. Every time it's pulled back like this, it's gone higher, and maybe that's what's going to happen here. Lilly, Lilly has done so much for fat people, including me. I love their Monjuro drug. It makes me feel better every day, and I lost a lot of weight. Why is it pulling back? I think it's pulling back for a couple of things. This has been a problem for healthcare in general. It makes a lot of money. Their last earnings rate was up. Earnings were up 61%. This is going to be comparing $6.42 with the next one versus $1.18. That's like 300 to 400% higher. Its revenue is growing. Its weight loss drug is top notch. Why is it under pressure then? Anytime you're this big of a target, your sales are this big, your stock has done so well, and if you don't believe me that it's really done well, this is the weekly. That's what's called doing well. Pull back the daily. Um, the government's is trying to pressure drug stocks. That's partly why pharma and biotech have been weak. There's a thing called the IRA that's in place, but it only does 10 drugs or so a year. There's a thing called MFN where Trump wants to pay what they pay in other countries or derivative based upon that. And so I think that's part of the problem. The other thing that Lilly has to worry about is competition. Novo Nordisk has fallen down, but there are some orals that have good data, and it'll be interesting to see. But this is a stock that if you're a value person, I think it's undervalued. A multiple of 27 and a growth rate of 60 to, well, the low in February is 19, but 19 up to 113, and it's going to be 3 digits growth. And you could see most of the time they're positive surprises. I think it's an undervalued stock, but I think healthcare, especially big ticket items, have been tough because of the government pressure. Elevance is not like United in that it had the litigation issues, but it's like United that it's a managed care company. They've had issues on the Medicare Advantage side, all of them, and I work with them, so I wouldn't say anything about them anyways, but I think the entire group got a bump. Regeneron is a great biotech company that has used to be an expensive biotech company. It's pulled back dramatically as it continues to grow its revenue and earnings. And I think it's clearly um, has great revenue, although perhaps growth rates is going to slow down. This is earnings on this side, revenue here. It looks to me like it wants to go higher. Let's go down to the daily. I kind of thought it's kind of like going sideways here and a break above this 200. So it's going to be on my watch list, but I want growth. I want things that are moving now. NXT is a solar infrastructure play, and earnings are not to October 29th. Not a pretty, not an ugly chart, but kind of a very loose chart. Solar Edge is another solar and doesn't have positive revenue anymore. I mean, earnings, it does make money, but this is one that's been destroyed. Obviously, no dividend, but if the sector goes up, this probably goes higher. First, Sun Run. I mean, I love the chart pattern. Big pullback, failed, broke above the 200. A successful retest of the 250 here. Wants to go higher. It's going to be 4 cents versus a loss. It's going to be 60 million in revenue versus 53. I think we'll look for surprises. I think Solar Run looks fine. Molina Healthcare, another entity probably impacted, like Elevance and a lot of other payers, getting a big lift because of what happened with United. If they're buying United, then they're going to buy everything else. And it's funny. I'd bought CVS a couple of days earlier, and it too got a bump. But CVS, which is Aetna, as well as the drugstores, um, I mean, it looks a little bit different up in its recent trend. They've had their own issue. Let's see if there's anything else I want to show you. Anybody doubts the power of the two dot system? Um, one dot on this date, we started talking about Alnilam Pharmaceuticals here. And the next day it was like, wow, three momentum dots in a row coming out of a squeeze. This thing has not looked back. Wow. That's all I could say. And that's why one of my favorite searches is to look for those two dots. Doesn't always work. In fact, I won't say it failed, but I just saw one back here. Where did it go? Oh, wrong two dots. Well, I guess it was the wrong two dots. No, here it was. This one, it went up, but it quickly failed. So just because you get the two dots, highly likely you're going to go up a little bit, but it doesn't mean you're going to do this. What this stock has done, which is just phenomenal. Enphase is another solar stock that's been beaten up. It's kind of similar for the entire group. JKS, I liked sideways move, but big move off of the 50 and 200. But I don't like the fundamentals. The chart looked okay. The fundamentals not so hot. AbbVie is a pharma stock that pays a dividend. It's a it's actually in the biotech group. It's a spinoff from Abbott, but it pays a dividend like a big pharma, 3.51%, growing its revenue, its earnings, growing its revenue, slow mover. But if I had to look for a safer play in healthcare, I like to buy something whose weekly chart looks like that. All right, so that would be top down. Market rotation, what does that mean? It means the laggards, the things with ugly charts, are starting to outperform, and those big growth things that we love are pulling back. So it's not a surprise that I'm seeing some not the most beautiful charts. Biohaven, horrible looking chart. This one actually made a couple of my scans today as it broke out above the 50. Um, it's hard to buy stocks. At least it's hard for me to buy stocks that are so far down in the pattern. Then you have J&J, which looks great, and we're going to have 278 versus 242, so a little bit over 10% growth. Revenue has been steadily, slowly moving higher as well. This is a leader, pays a 3.43% dividend, and that might be partly why it's doing well. So that was some of the healthcare stocks. You notice two things in that whole review: healthcare and solar, healthcare and solar, healthcare and solar. As I looked at 1,000 charts, a little bit over today, those were the things that were in the different lists that I download or accumulate to look at the leading stocks. So that's one way of doing top down. Another way would be to just rank, we'll stay with the same system. Look at all the groups. So what did we miss here? We missed department stores, home improvement, financial, and specialty retail. So let's just look at those real quick. Department stores, home improvement, diversified financial, specialty retail. And there are a couple things in here. It's already ranked by the 2-day momentum. Carvana. Um, this has been a fantastic stock, especially with the recent rally we've been in back here to March. Just had a pretty steep pullback down to the 50. Isn't moving yet, so I would put this on a potential watch list. Earnings would be $1.27 versus 64 cents. That's double. It has lots of earnings and revenue surprises. It's pulled back to the 50. PDD is a Chinese online retailer and others things, and doesn't look that great here, but it showed up on a bunch of my scans. And one that's similar that I don't see, here it is, right in front of my face. This is one of my favorite stocks. I own this stock, so I'm talking my book. This is SE. SE just had earnings, and you could read about it, Motley Fool. Is it too late to buy? Still be an attractive investment. I hope so. I've liked the stock for so long that when I was at a board meeting dinner in early December, one of our board members who had just sold a company said, Jeff, if I had a lot of cash right now and I had to pick one stock to invest in, what would you invest in? I told him to buy C. I still think C looks good. I love earnings, and again, $1.05 versus 54 is a double. 563 versus 432 is 130. That's 30% growth, which is consistent. You're paying 42 multiple for it. There's no dividend. They have gaming. They have, I think they have data centers. They have online sales. Pretty cool powerhouse. I like SE. All right, so that's the top-down approach. I also can't help myself and look at bottoms up. So let's look at a couple ways to do that. So I'm going to go back to the impulse list. I only leave this on because I like earnings, but I like to see the earnings date. So I've still got the same price and volume. So let's do a nice top-down review here. Or, yeah, let's get stocks that are in an uptrend. Put that in here as well, and I like pullbacks and uptrends. And then I have what I call my impulses, and these are volume, breakouts, momentum, and gaps. Because go look at episodic pivots, for example. Go look at stocks that are starting to move. They start with one of those four things. So why don't scan for them and see which stock has them? So I picked pullbacks in an uptrend, ranked them by those impulses. Let's look at a couple. XNET. The first one takes a little longer. And Praveen and I have talked about things to change that. So we're in an uptrend. It's kind of wide and loosey-goosey, and it's a cheap stock. XIFR doesn't do much for me. Cheap stock. Here's that run. Big pullback. As I said, failed a couple times and then retested. That's my favorite look. I think this is the safest kind of way to buy something that's bottom fishing, is one that has broken out, retested, pull back, retested, and now it looks like it wants to go higher. There's PDD. We already looked at that. NU. I think they're banking software. A breakout here. Here's Jinx that we talked about already. HSAI is an auto parts. They've got impressive fundamentals. Let's see if that shows up here. If I hover, it shows up. If I click on it, it stays. So in May, it really jumped its revenue, and that's when I say impressive fundamentals. Still lost money, but a big improvement there. It's got a massive PE, so it's looking at downstream sales. This one I thought looked interesting, and I know I saw something about this on the fundamentals that look good. So let me just check something out. So I do keep this around, market surge, for a number of reasons. I like some of the scans, so I've built my own scans in. All right. But I like the annual earnings per share growth. And it's a turnaround play because it never made money. And 26 is projecting 68 cents and growing over 100 times. So even if the multiple came down from 292 to say 100, that's a $68 stock and it's trading a little bit above 25. So I like that fundamental story. I like the nice uptrend. Sorry about that. Um, that looks interesting. I don't like the candle shape, but remember it was a down day and this is still finishing up, and it was up on earnings the night before. Here's First Solar again. Here's DQ, another solar stock. United, Shoals, solar stock. So similar to the one I like so much, which was Run. Was it Run or JKS that kept retesting? JKS. Shoals broke above, keeps testing. Will this be the one? I don't know. It'll be 12 cents in November versus 8 cents. Don't know what the revenue change is. SGML, Sigma Lithium. Well, lithium stocks have been in play, even bad ones, so I don't know what to say about that. Regeneron, CSIQ is a Canadian solar. Again, broke above the 200, a beautiful retest. Another retest. Is it ready to run? It had momentum, breakout, and volume. So I could go down this list. Verizon, you buy these when the market's going down because they pay a big dividend and they don't go much when the market changes. Pay 6.67. All right, I bet you're getting tired. I'm getting tired. So let me just show you my real secret weapon. Let's clear that. Drop down the arrow. We may not see any today. Price over 5. Volume of 500. 2-day momentum up equals one stock, which is that XNet. That tells me I should go look at it further. It doesn't have fundamentals here. Let's put it on a weekly chart. I'm surprised. So it's been dead for a long time. It's starting to move. And why am I looking at it? Because the scan I looked at, and I'm going to go to daily chart, looks for these two double dots, 2 days in a row of momentum. It had 2 days of big volume and gaps coming out of a squeeze. Super strong relative strength in OBV. Kind of cheap stock. I don't know anything about it. Obviously not an American company with that name. But there you go. There's my top-down review. One tool. Took too long. It's 53 minutes. I hope you have a great rest of the weekend. Come to my office hours on Tuesday. I'll have a link in the remarks section. Thanks, everybody, and talk to you Monday.